Welcome. In this video, Zbcn coin new unlock is coming. What will happen? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze Zbcn.
In the price chart, it was previously evident that the asset was under the influence of a clear downtrend. This downtrend had limited upward price movements for a long time, suppressed the strength of buyers, and negatively affected overall market sentiment. However, recently there has been a significant breakout from this downtrend structure. From a technical analysis perspective, this breakout can be interpreted as a signal of a shift in market dynamics. The upward break of a downtrend is a key indicator that selling pressure is weakening and buyers are gaining strength. After this breakout, if the price establishes itself above the trend line and shows some consolidation at that level, it contributes to strengthening upward momentum. Currently, the price may be testing this previously resistance, now support trend line. In technical analysis, this is called a retest and is often interpreted as a precursor to a larger upward move. The retest phase is important for investors to absorb and validate the new price level. If the price holds at this level and continues its upward movement with support from new buyers, it may confirm that the market has re-entered a bullish mode. Even if volume decreases during the retest, an upward move with increasing buying volume afterward is highly likely. This process can be a significant opportunity for patient investors. Many traders view pullbacks after trendline breakouts as buying opportunities. If the price approaches the broken down trend line and finds strong support there, beginning to rise again, this would be seen as a highly positive structure from a technical standpoint. In this case, a higher low forms, which is a strong signal of a trend reversal. Moreover, this breakout can serve as a turning point not only for short-term traders, but also for medium and long-term investors. Downtrend lines typically represent prolonged correction or decline phases. Breaking out of such structures may revive positive expectations even for investors who have been waiting on the sidelines for a long time. This technical development can also positively influence investor psychology, increasing confidence in the market. It creates a perception that the price has renewed its upward potential, prompting more investors to take positions. The potential upward wave following a retest is typically strong and high in volume. Previously, the downtrend line acted as a resistance, and many investors viewed it as a selling area. Now that it has turned into support, traders may be more inclined to buy at this level. This shifts the supply-demand balance in favor of buyers. If the broken trendline continues to hold at support, it gives the market technical confidence and could lead to a sharp move toward previously unreachable price levels. Especially in highly volatile markets like cryptocurrencies, trendline breakouts and the following retest structures play a crucial role. These formations affect not only technical indicators, but also investor psychology directly. A broken trendline might have previously caused losses for many traders. Now, with this line acting as support, confidence in this level increases, becoming a major factor driving price upward. Additionally, post-breakout retests are often recognized as signals by many algorithmic trading systems and automated trading bots. This means that a technically confirmed retest is not only evaluated by manual traders, but also by automated systems, further increasing buying pressure and causing the price to gain upward momentum quickly. The movements of the price around this broken down trend line should be monitored closely. Whether this line continues to act as support is critical not only for technical analysis, but also for investor confidence. If the line is broken again to the downside, it could create confusion and uncertainty in the market for a time. However, if the price holds above the line and rises consistently, this structure is classified as a classic trend reversal in technical analysis. Furthermore, the successful breakout and subsequent retest create a solid foundation for the price to move toward new highs. For investors, this process is key to re-establishing confidence in the market. These types of reversal formations have an impact not only in technical sense, but also on an emotional and psychological level. The post-breakout rally may be considered the first signal of a potential new bull cycle. Especially if the rise is supported by volume, it facilitates the entry of new buyers into the market, helping the price continue its upward journey with greater momentum. Therefore, it is important for investors to analyze this critical process carefully and closely watch whether the broken trend line is now acting as support. If the price succeeds in holding at this level and makes a strong move upward, it will attract the interest of many investors. Thus, the trend reversal would be confirmed technically, and the market sentiment would shift positively. When all of these factors come together, the breakout of the downtrend followed by a successful retest can be a strong indication of a powerful price movement ahead. But we can't base analysis on trends alone. Let's take a look at other metrics as well. Stay tuned.
One of the key structural elements that stands out on the chart is the upper resistance zone currently being tested by price action. This area is often referred to in technical analysis as a bearish order block. Bearish order blocks are zones where strong selling pressure occurred in the past and are typically formed by institutional investors or participants executing high-volume trades. As a result, when the price reaches these blocks, bullish momentum may temporarily stall and short-term profit-taking or selling pressure may emerge in the market. The behavior of the price as it approaches such critical resistance areas offers important clues about the direction of future movement. In the current scenario, the analyzed chart shows a zone at the top where heavy selling previously occurred and pushed the price downward. The price is now approaching this level once again for a potential retest. Technically, these types of levels can create a significant supply-demand imbalance in the market. While buyers attempt to maintain upward momentum, sellers who previously entered trades at this level may re-enter and put downward pressure on the price. This bearish block zone, often consisting of sell orders placed by large investors, can lead to a sudden increase in supply when approached. This means the price needs extra buying power to continue its upward trend. Breaking through this level in a single attempt is not always easy, as the pending sell orders can diminish the strength of buying interest. This can also create the potential for a liquidity trap, where the price quickly approaches the level, attracts buyers, gathers liquidity, and then sharply pulls back. It's common for the price to initially stall when reaching this level because market participants tend to act cautiously around such key zones. While many traders may see these areas as potential selling opportunities, buyers may hesitate, waiting to confirm whether any breakout is sustainable. This uncertainty often causes sideways price movement or temporary pullbacks. However, this should not be viewed as negative. In fact, testing a strong resistance and eventually breaking it after several attempts can lead to a healthier and more sustainable uptrend. Additionally, any retest movements that occur at such levels can provide clearer insights into price direction. If the price reaches this area and reacts with a slight pullback, it shows that the market still respects this zone. However, if follow-up buying occurs after such pullbacks, it may signal that the bearish block is starting to lose its influence. A bullish breakout above the bearish order block, especially if accompanied by high volume, could spark a new rally. On the other hand, failure to break this zone could result in the price turning back toward lower levels. Therefore, it is critical for investors to define stop-loss levels and maintain proper risk management when approaching such major resistance areas. Still, if the price remains near this level despite a few failed breakout attempts, this may indicate a psychological accumulation phase. In other words, if the price is spending time gathering liquidity at that level, the eventual breakout could be much stronger. Overall, the bearish order block at the top of the analyzed chart represents a key resistance point and should be closely monitored by market participants. It is perfectly natural for price to slow down and experience minor corrections as it approaches this zone. What truly matters is the strength of the price reaction within this area. If sharp selling pressure does not emerge and buying volume remains high, the price may continue upward with greater conviction after breaking through the block. This could offer both short-term profit opportunities and long-term position reassessments for investors. It's important to remember that the market is always dynamic, and no pattern or resistance zone guarantees an outcome. However, understanding that selling pressure may reappear in a zone with a history of strong supply can help investors develop more informed strategies. For this reason, the analyzed resistance zone, the bearish order block, should be seen not only as a technical barrier, but also as a psychological threshold for investors.
The upcoming unlock of 3 billion tokens in August within Zbcn Coin's total supply structure is a critical event, particularly from a supply-demand balance perspective. This development is something investors and traders should monitor closely. As of now, there are approximately 34 billion Zbcn tokens in circulation, and with this unlock, the supply will rise to 37 billion. In other words, the circulating token count will increase by roughly 8.8%. At first glance, this might seem like it would create downward pressure on price due to increased supply, but the reality is more complex. An increase in supply does not automatically mean a drop in price. The market impact of such unlocks can vary significantly depending on various factors. First, to understand the unlock's potential price impact, several questions must be answered. Who will receive the 3 billion tokens being unlocked? Will these tokens be sold immediately? Or will they be held by the project team, investors, or partners? If these tokens are not released into the market immediately and instead held or staked for a period, the impact would be quite limited. However, if the tokens are transferred to exchanges and added to liquidity, this could increase selling pressure. Still, even in that case, it's not a given that this alone would push prices down. Ultimately, the level of demand that meets the supply will determine everything. If interest in Zbcn grows ahead of the unlock, especially among retail or institutional investors, this new supply could be absorbed more easily. In fact, the opposite might occur. There could be a positive market sentiment following the unlock. Investors might feel more confident after the event, believing the unlock has happened and is now behind us. For many, token unlocks represent a source of uncertainty. Once the uncertainty is resolved, the perceived risk decreases. In fact, we've seen many projects experience price increases after token unlocks, and the same could be true for Zbcn coin. In addition, if Zbcn coin shows strong technical formations and structures that positively influence investor psychology, this could help offset the potential impact of the unlock. For example, if the price is in a strong uptrend leading into the unlock, this would indicate the presence of a strong demand base capable of absorbing any selling. Furthermore, Zbcn's roadmap, technological progress, community engagement, and partnerships will also shape how this event affects the market. If the unlock is accompanied by major developments, such as a tech release, major exchange listing, or institutional participation, the unlock's impact may effectively become negligible. On the other hand, this unlock should be evaluated not only technically, but also from a psychological perspective. Markets often operate on a buy the rumor, sell the news basis. In this context, the August unlock news may already be priced in by the market. Investors could have known about this event months in advance and adjusted their positions accordingly. In that case, when the unlock actually happens, there may not be any significant sell-off. Instead, investors may shift back to buying as the uncertainty is passed. Additionally, many investors and analysts who evaluate Zbcn coin's long-term potential may disregard short-term supply increases. If the tokenomics are solid, the project is supported by the community, and backed by strong technology, these investors might see the unlock as a buying opportunity. Tokens sold in anticipation of a post-unlock drop may be scooped up by stronger hands. This could provide a more solid foundation in the mid to long term, leading to a renewed upward movement in price. Another key point is that in projects like Zbcn, token unlocks are usually scheduled and transparently shared with the community. If the unlock schedule is regular and predetermined, this builds investor confidence. In environments free from uncertainty, investors tend to behave more boldly. Also, when reviewing Zbcn coin's token distribution, it matters who holds the locked tokens. If they are in the hands of the project's founders or long-term holders, the likelihood of immediate selling is lower, which in turn limits the unlock's impact. It's also important to note that an increase in token supply doesn't necessarily mean a drop in price. This is a common misconception in the markets. Prices are shaped not just by supply, but also by the level of demand that comes with it. If interest in an asset increases, even a larger supply can lead to higher prices. Just as Bitcoin's halving reduces supply, in some projects, increased supply is balanced by rising demand. From this viewpoint, if institutional or retail interest in Zbcn grows, the unlock could even have a positive price effect. Another point to consider is the overall market trend. If the broader crypto market is in an uptrend during August, Zbcn coin is more likely to align with that trend. In such a case, the unlock may not be a hindrance, but instead could provide additional liquidity. New investors might even see the unlock as an opportunity to enter at more favorable prices, further supporting the price. In conclusion, while Zbcn coin's upcoming 3 billion token unlock in August may initially seem like a supply-side risk, the market's reaction could be far more nuanced. Factors such as who receives the tokens, how they are used, current demand levels, investor psychology, overall market trends, and the fundamental and technical position of the Zbcn project will all determine the direction and scale of the impact. If Zbcn manages this process transparently and strategically, building investor confidence while continuing to develop, the unlock could serve as a growth catalyst for the project. Therefore, rather than viewing the unlock solely as a short-term risk, it may be more appropriate to see it as a medium to long-term repositioning opportunity.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.